I'm Micah Gibson, and this is PwC's Tax Insights in Brief. On August 6th, Treasury and the IRS issued proposed regulations that address certain issues arising under the dual consolidated loss, or DCL rules, including how the DCL rules interact with certain minimum taxes, such as those under Pillar 2. The proposed regulations would also implement a new regime addressing certain disregarded payments that are deductible for foreign tax purposes. The DCL portions of the proposed regulations include both new rules to coordinate with Pillar 2 and revisions that Treasury and the IRS have been considering for some time. The proposed Pillar 2 rules confirm that a foreign use can arise when expenses that compose a DCL offset globe income under a QDMTT or IAR, or through the transitional safe harbor. However, given the continued uncertainty regarding Pillar 2 implementation, the proposed regulations would defer the DCL consequences of Pillar 2 for one additional year, subject to an anti-abuse rule. Some of the other proposed rules include special status and ordering rules for intercompany transactions, which generally respect intercompany transactions for purposes of the DCL rules. The proposed regulations also generally reduce income attributable to a separate unit for income arising from stock ownership. This includes gains, dividends, and GILTI and Subpart F inclusions. The reg package also proposes an entirely new anti-hybrid regime for disregarded payment losses. This complex set of rules attempts to quantify the net financing and royalty expense that disregarded entities deduct under foreign law in transactions that are disregarded for U.S. tax purposes. Where there is a foreign use of these expenses, taxpayers would be required to include in income the net amount of deductions under foreign law. Finally, the proposed regulations include an anti-avoidance rule that applies to both the DCL rules and the disregarded payment loss rules. Taxpayers should determine how the proposed disregarded payment loss rules could apply, if finalized as proposed. Lastly, taxpayers should consider whether to submit comments on these proposed regulations. For more details, read our insight. Thanks for watching. This has been PwC's Tax Insights in Brief.